Ripple takes on another country, and Ripple XRP versus SEC update. Hey, what's going on, everybody? Welcome to the channel. Glad to have you guys here today. We do have a red candle day. We currently have 35 minutes and 42 seconds left in the candle. We're down 3.26%. So yesterday, we ended up with a green candle, and we ended up a total yesterday of 2.94. Today, we do have a bearish engulfing candle, completely engulfing yesterday's gains. We had a super dip, and luckily it has rebounded. So today we have an awesome video for you. Ripple takes on another country. We're going to get into that, and an update on the Ripple XRP versus the SEC case. We'll dive into that a little bit. And then, of course, we'll be doing charting. We're going to check out the XRP weekly, daily, 4-hour. And, you know, I've been getting a lot of feedback. You guys have been liking this lower time frame information as well. We will definitely cover that. We'll also jump into Ethereum and Bitcoin charts in today's video. And hey, if you're new here, my name is Ryan Huggins. I'm a crypto and real estate investor here in Orange County, California. My job is to help you your crypto shortcut. And if you're like most people, you probably don't have the opportunity to spend hours a day inside the charts, hours a day reading articles, but that's what I do. That's my job. And I bring that information to you in a condensed manner. So if you're looking for a crypto shortcut, smash subscribe, smash that thumbs up. Also, if you're looking for a side income, you want a passive income opportunity, check this out.
If you're ready to earn an extra $200 to $3,000 per day in passive income, just like the Run Guys do every single day, then like this video, subscribe to the channel, then click the link in the description of this video to learn the Run Guys' #1 way to start earning passive income online with crypto today.
Yes, that's right. All you have to do is go down to the link in the description of this video right here, click on the link, and that'll allow you to sign and join up with us, the Run Guys, become a Bull Runners Club member and partner with us in our ongoing business venture. So we really look forward to seeing you on the other side. Kicking off with the news first and foremost, XRP poised to break new ground as Ripple unveils this new $1 trillion worth of on-demand liquidity. Where is it coming from? Yes, that's right. And here it is. Ripple is looking to tap the almost 1 trillion mobile money value in Africa through the use of the fast and cost-effective on-demand liquidity service that they provide. They announced on Tuesday the rollout of an XRP-based corridor via a strategic partnership with MFS Africa. By tapping Ripple's on-demand liquidity, customers within the African continent will be able to transfer funds using XRP, making transactions faster and cheaper. Ripple has signed a deal with the largest mobile payment gateway in Africa with customers across 35 countries. MFS Africa. The need to bring the system of electronic payments to the leading African fintech has emerged as the number of customers who use mobile money transfers on the continent is growing dramatically. Ripple's on-demand liquidity service will notably utilize XRP cryptocurrency to move value seamlessly across borders. It's predicted that the majority of mobile payments users in the near future will be mainly from Asia, Pacific, and Africa, and will reach 70% of the global population. These areas normally struggle with liquidity sourcing. This is where Ripple comes in. Tech from the blockchain firm will help them get access to capital without traditional sources. The partnership with MS Africa signals a move by Ripple to capture a considerable portion of the continent's 2.7 trillion with a T, baby, market opportunity, the biggest driver of business growth worldwide, according to UN figures. Notably, Ripple has launched mobile on-demand liquidity corridors this year, despite its almost 2-year-long litigation with the SEC. A new payment corridor was opened in Brazil via the team up with Travelex Bank. As Ripple's key partner, Tranglo, was expanding into the Mid-East, another on-demand liquidity corridor was unveiled. Moreover, Ripple has also expanded its payments liquidity corridor to France and Sweden after inking deals with Lemonway and XBot. So as you can see, Ripple is continuing to take over not take over, but they're continuing to immerse themselves into country after country after country, which is huge news for fans of Ripple and their token XRP. The SEC battle update, we'll cover this today as well. The cross-border payments token has gained 9.68% over the past 24 hours to change hands at 38.28 cents. That was as of the end of yesterday's candle. Obviously, today's candle coming to an end, we had a slight pullback from there. And of course, we do know that there's positive news regarding the case with Ripple because they did gain access to the elusive William Himmon drafts and emails, and the company's also garnered massive legal support from cryptocurrency and the finance industry. Earlier this month, Ripple CEO Brad Garlinghouse noted that over 12 exchanges, firms, developers, investors, and associations had filed documentation asking for permission to help his company in its ongoing scuffle with the securities watchdog. Those are the amicus briefs we've been talking about, also called Friends of the Court, basically supporters of Ripple and the fact that they think that Ripple did not violate this issue. These bullish developments could help Ripple win the case against the SEC and set the stage for a mammoth XRP rally. However, if Ripple doesn't triumph in the lawsuit, faces further trouble, a brutal breakdown to 30 cents or lower can be expected. So let's go jump into the charts and see what's going on with XRP. All right, guys, we're going to go ahead and clear everything off. I was doing some charting earlier, some trading earlier, and now we start here with a clean slate. So first and foremost, let's go ahead and do what we always do. Let's jump to the weeklies. Let's go to our Heikin-Ashi candles, and let's look at our supply and demand boxes. So as you can see, this is our top side supply and demand candle. We'll draw a box there. We'll do white for our weekly, and we will break this down to smaller time frames. The opposite is true. Here is our most lowest candle. Obviously, we could have used this one here, but this is our most recent top candle before a down move. This is obviously our most recent bottom candle before that up move. So that is where we are right now. You can see price did even dip a tiny bit deeper. So after we've got our supply and demand zones that we find on Heikin-Ashi, we jump over to the Japanese candlestick. So yesterday, just an absolute crazy or last week, an absolute crazy drop here. We do still have this really large fair value gap that we've been talking about that will probably get filled in the near future. So we have a fair value gap to the upside. Now, we've also talked about the really exciting thing for XRP is there is no other fair value gap to the low side. There's no imbalance from all this old school back in the day stuff on XRP on the weekly charts. Now, when we flip to the daily, unfortunately, there is a pretty large fair value gap that does still need to be filled all the way back here at 27 cents. That also corresponds with a supply and demand zone, which we'll talk about now. So now that we've got the fair value gaps indicated and we know what's going on, we do have fair value gaps to the upside. And you'll also notice on the way up here, if price does move to the upside, it does actually end up taking out that fair value gap. So now that we're on the dailies, so you have your weekly boxes here. Let's get the weekly boxes. You have an understanding. The bottom level of this is 44 cents. The top level of this one is 35 cents. And that is where supply and demand is until we break below or above that. So that's where we're at right now. We're going to go ahead and remove those weekly ones. Let's now take it to the daily so it's a little more condensed form, okay? So price right now has a top side situation right here because we did not break out of it. Now, if we do break back to the upside, then our upside supply and demand box will be up here at the bottom side of that 46 cents. But right now, it's pretty much literally trapped inside of its most recent supply and demand box. So if it breaks in or out of this, we can just use this. You know how we talk about trading inside of a range or trading inside of a channel? Like, for example, we talked about yesterday how right now price is trading inside of a channel. It's actually trading right here to right here. And it did wick outside, right? But so right now, as far as like what is that level, it's 33 cents in the bottom side and 39 cents. It's at 6 cents range. That's the larger, more broad scale. But right now, it is also trading inside this new micro scale that's been started for the last 2 days. It's trapped. It's like ping pong, ping pong, ping pong, bouncing back and forth in there. And that's between a smaller, let's get rid of this one, smaller scale. So that's 39 cents to the upside and 36 cents to the downside. So instead of this big 6 cent range, now we've narrowed it down to a 3 cent range that it could easily bounce and get outside of. So now let's also turn on our moving average ribbon that we use. We have our 50 exponential moving average, and then we have our 1100 exponential moving average that we're currently using in our scale. And these are dailies. So I'm going to color those yellow, yellow, yellow. All right. So we have that there. Now, what we do know is if price were to break out of this area and head back up, it's going to run into some major resistance here at the 50 exponential moving average. We're going to go ahead and draw that line there. And I've been getting some really good feedback about this 50 exponential moving average timeframes thing I've been doing for you guys. I'm glad you guys are liking that. For price to break out again, we would need to break above this zone, which is that 43 cent. Now, obviously, the 50 exponential moving average will continue to drop as price drops or rise as price moves. So this actual level, it can move up and down. It's not a set number. By the way, I'm not a financial advisor, so none of this is financial advice anyway. Do not buy or sell anything we talk about on this channel. Do your own research as far as that goes. So yellow, we're going to leave that mark there. And that right now is our daily 50 exponential moving average. Okay, so we have that. And then we're going to go ahead and drop down to our 4-hour zone here. And as you can see, we are riding on that 4-hour right now. And we're going to have to do, let's go here. And let's get rid of, so we do know we're in this range, but we're going to get rid of this. We're going to play a tighter range. So that way it's not as, it's not stuck, right? So now we're going to use this range. We need our magnet. So we're going to use this candle as our top side candle, even though this candle has now flipped white, meaning that it is changing direction on us, right? So this is the down move, but this will be the down candle here that we'll use, okay? And then again, 4 hours, we use red, and we'll use red there, okay? So that's our trading range as far as that goes on the 4-hour supply and demand zone. So there is actually, if this were to come back down, there's a big demand zone here at 34 cents. So if price hits here, it very well could reject. If not, and if it keeps on piling through, then we would look for it to break these lows down here. But that low is going to be gray. All right. Now we also have our 4-hour 50 exponential moving average, and we're going to go ahead and mark that one with the red candle. And if you'll notice right now, since we are bearish on all time frames for the most part, we're marking above the 50 exponential. So we need to get above the 50 exponential moving average, claim it as a support, and move our way to the next one to give us a little bit of bullish momentum. So now we go to the 1 hour here. Again, we're in this trading range. Now we're doing 38 cents is going to be a resistance level. And then we have this level down here, 34 cents. So that gives us a little bit of breathing room, right? So right now we are on our 50 exponential moving average. We're on this on the 1 hour. So we're going to take a look at this. I'm going to pull up my algorithm over here on my other computer. Okay, so our 1 hour, interestingly enough, it's giving me mixed signals right now. But if this continues its move to the upside, we could flip this bullish, because right now it's on the teetering point on this time frame of the 1 hour. It could very likely flip bullish. In fact, if it were to break out, it would not surprise me. It starts to make its way to the upside. Let's turn on our RSI here. RSI right here, Traders Dynamic Index. That's the RSI with the divergence indicator. Okay, so what we're seeing here is price has broken back inside of the volatility band, flipped the background green, which is micro bullish. If this crosses over and we have 19 minutes, we would really like to see this candle that's currently red. We would like to see this finish bullish above there, and then it may make its way back all the way up to the top of the supply and demand zone, 39 cents. So we want to see this turn green, because what that would do, and we'll take a look back here, what happened last time. Okay, so right here, price was teetering around. It made its way up. It broke through the yellow line, which is the market baseline, the moving average. It broke through there, and turned background of green, and look at all of this crazy awesome upward momentum that happened before it broke to the downside and then gave us the bearish move, right? So right now we're in bearish. If this bounces off and rejects here, so this could stay red and then all of a sudden more red and bleed out, or we could cross to the upside and that could be really bullish. So that's exciting. So what's exciting about that too is we are above our 50 exponential moving average. We're trying to turn this bullish. And if we were to get up above this 4-hour 50 exponential moving average, that would then set the stage for bullish momentum secured on the 1 hour. Let's drop down to the 15-minute. The 15-minute is the opposite. So the 15-minute right now is showing a bearish flashing indicator, meaning if price breaks down, and it's going to have to break below here though. So, and then 4-hour, 15-minute, we've been using this purple color. If price were to continue making its way down, and it may be exhausting. Now it's still climbing and it is still bullish here on the 15 minutes, but it's getting really close to the overbought territory of that 70 level. We're also noticing price is not running up higher anymore. We can even mark this candle as a top. If this breaks this candle, then boom, momentum continues, right? So you can see it continues to hit. This is a very important level right here. In fact, we can even go back one candle more. This candle here, this candle rejected, bounced off. Now this up here, reject, and starting to fall down. So if this falls down below this 50 exponential moving average, which we'll put it right there, we could see a continued drop to new lowers for XRP, and then that could bring us back down to these levels down here of 34 cents. So 15 minutes looking bearish. The 5-minute time frame is mixed. So, man, it's really weird right now. You know, yesterday we could tell we had some really great signals. Right now it's mixed. We do have the 50 exponential moving average crossing up, which is bullish. So we're just gonna have to wait, honestly, for that. I mean, long term, as we talked about, so if we're looking on XRP daily, we are showing bearish signals, but for short term, it's gonna have to climb up anyway. And what I mean by climbing up is price could likely return all the way up to the level of the 50 exponential moving average on the daily, which is here, which is all the way up here. Now it is crashing hard, so this could, you know, price could keep running up and then run into the 50 moving average, and we'll see from there. But right now, the daily is bearish, but it has some short-term momentum to the upside. The 4-hour charts are bearish and could actually be the signal of the down. But anyway, lower time frame, 1 minute is bullish. Our 1 minute is bullish. We just crossed to the upside. Our 5-minute is bullish. We just crossed above the upside. So like I said, that 1 hour time frame is the most important one. If this thing can continue to pump, climb and break out of this zone right here, if we can break above this 39-cent level, we have a real true opportunity for price to come all the way back up to this 44-cent level. Now the opposite is true. As we saw, we talked about on the 15-minute time frame, it very likely could be running out of steam, and then we could see a drop and it returns to there. Jumping back to the daily though, we're still looking bearish on all the different indicators here, even though it's been an up, down, up, down, up, down. There is possibilities of it coming back down here, taking out these lows, moving to new lows from back here in the day. And this is what we've continued to cover every single day here. By the way, if you're not subscribed, feel free to subscribe. If you're getting value from these videos, make sure you click that subscribe button. Also, if you want to join our team, make sure you click the link in the description down below. Join with me directly and we can work together. So make sure that happens. And then we also have this one here. So these lower levels are this 25, 26 cent level. And then that also coincides with the fair value gap that I'm waiting for to happen right there as well. So that 26 cent level is a possibility. We'll keep on watching the news. It looks like they're trying to start a war. And if there's a war, we'll probably have a pump on everything. The Sam Bankman-Fried FTX thing, he's a definite fraud, but for some reason, mainstream media keeps propping him up like he's this like golden boy, which is really weird. And when everyone knows the facts, mainstream fake news just keeps on pumping him up to be like some sort of god, which is really, really weird. So we'll see what happens with all of that too. Let's look at Ethereum. All right, so Ethereum, we'll take it to the 1 hour charts here. Let's get rid of the fair value gap. Boom. All right, so I've got these little levels marked off. This was a couple days. This is what now? 1, 2, 3, 4 days now. So 4 days ago, it went down, continued going down into our support zone. Then it started making its way up. It never made it to this level up here, unfortunately. Came back down, retapped that supply zone. You can see our RSI starting to climb up. It's about to cross over market baseline here as well, so we could see a pump on that. So let's take a look what is going on with XRP. XRP daily bearish. XRP 4 hour, or Ethereum, sorry. Ethereum bearish daily. Ethereum bearish 4 hour. That does not mean we might have some lower time frame move to the upside like we did yesterday. We even called that yesterday. Hey, look for a move to the upside, which it did for those first several hours before it had the big crash off. So the 1 hour looks bearish. The 30 minutes bearish. 15 minutes. 15 minutes look like it's about to fall now. So Ethereum is not looking very strong at all. The 5 minutes bearish. 1 minute has a potential of doing something, but we may have the same scenario here where it climbs up and then just rejects to the downside. That's as of right now. Again, things change. As things progress throughout the day, we could catch more momentum. My indicators change. Come back tomorrow, find out what happened for sure. I will update you guys on that as well. So subscribe so you can keep up with that. We'll go ahead and mark this for today. And what's interesting right now on Ethereum, only the 1 minute looks like it might make some moves to the upside. And if it does, it's not going to live that long. And it's very likely we just start to fall off. All right, so taking a look now at Bitcoin, also a down day, 1.52%, not necessarily a full bearish engulfing. So that's good news for Bitcoin. And then as we take a look here on the 4 hour charts, 4 hours looking bullish as per this, but we've been trading sideways for so long. So let's do the run through on Bitcoin here. Bitcoin's daily chart, bearish. 4 hour chart, bearish. 1 hour chart is bearish. 30 minutes, bearish. Shoot, 30 minutes looking like it's about to. No, it's got some more room to go up. 15 minutes, bearish. 5 minutes. 5 minutes is getting a little bit more bullish though. So it's pumping some momentum into this lower time frame, the 5 minutes, where it's getting some steam to the upside. However, it did just now tap off of that 1100 exponential moving average. So we may be dumping from there. All right, so there's a lot of noise going on in Bitcoin right now because it's trading such a tight range. Let's go ahead and drop to the 15-minute charts and see. As you can see, we had this 15-minute chart marked off. It went and tapped it, and then it came back to this range. It has fallen there. It's trying to make its way back up to that level. Did not quite get there. In fact, it went to here now because we've got new data. So this will be the new data that just popped in, rejected off of that supply and demand zone. We do have a low side supply and demand zone here. It's been bouncing off of that, making its way to the upside though. So let's 15-minute Bitcoin, like I said. It's kind of looks like it's run out of the upside steam. It may come back one more time and tap. You can see it's already outside of the volatility band, the white line. And so it's likely to come back. So it came back in here, but it had a lot more room, came back in here. Now it's coming back down. Watch and see if this crosses down for this short term. If that continues to break down, then where could we be going? A deeper correction. And this is only on the 15-minute time frame, but 16,321. If we dipped even below there, we could be getting back to this one, 15,931. So there's a couple downside levels there. So let's look at those levels again. So downside levels, we have 1643, 16,321, and then the deep one here, 15,931. Those are lower levels. To the upside, though, if we do build that momentum we were talking about, 16,790, and then up here is 17,000. All right, and then let's go back to the daily chart, and let's go ahead and mark these off again. So here we have our daily 50 exponential moving average. So we'll make it yellow. That's about 19,221. 4-hour exponential moving average, 17,400. Turn that to red. Our 1-hour exponential moving average, we're at it now. And it just rejected off of it. You can see here it did pop, it did pass through. You can see it just flashed a bullish background. But look what happened last time that happened, which was here, flashed for a couple hours and then immediately crashed there. So we have to watch close. You can see the market baseline is kind of sloping down. So usually when that is sloping down, that indicates it's going down. As you can see here, it started sloping up and price went up. But this could power through. And as that powers through, it could turn that back to the upside, back to this 15 minutes candle. If this does make its way down, break through here, we could see lower levels coming soon.
If you're ready to earn an extra $200 to $3,000 per day in passive income, just like the Run Guys do every single day, then like this video, subscribe to the channel, then click the link in the description of this video to learn the Run Guys' #1 way to start earning passive income online with crypto today.